Good morning. It is June 14th, 2023. I'm Eric Sapanik. I'm here with Damian White, and this is the Gold Spot. All right, we have a lot to go over today because there's just so much in the news. Damian, I know that a few weeks ago we didn't have as much to talk about, but now, just like that, a ton of stuff to talk about. I want to start off with a couple of things that are going on with one of our biggest cities, San Francisco. We saw some huge, pretty much walk away scenarios. If you could elaborate a little bit of what's going on with the Hilton and that.
Yeah, well, San Francisco seems to be the hot spot in the country right now for the showing the demise or the decline in commercial real estate, which is starting to put a lot of pressure on just about everything financial in the United States. A couple big, one of the biggest Hilton hotels, a couple of them were walked away. A lot of these mortgages, these commercial mortgages are coming, balloon payments are coming due. Now they're unable to be refinanced because the rates are so high. So the owners, the operators are simply walking away from them. There was another giant office building that was walked away from. I think it was a $786 million balloon payment on the loan as well, leaving that to the bank. And if you remember back about a month or so ago, there was an additional office building that was valued originally at about $300 million when they purchased it a couple of years back. It was just sold in distress for $60 million. So we're starting to see the decline of the valuations. Now what that does, it leads to a trickle effect where San Francisco is more the center of this problem because of some of their political policies and how they're running the city, and homelessness and crime and drugs, you go on and on. 80% of all the commercial mortgages in the United States are held by regional banks, the small banks. 12 to 18 months is the next time period where a majority of those mortgages need to be refinanced. So this problem is going to spread. So there's news and rumblings that there could be up to 300 or more regional banks that will fail. What this is doing is it's causing all the regional money to dry up nationwide, and it's forcing all the other capital to the big banks. That's basically point one, and that's going to be contagion for real estate. It doesn't happen in a few months. Real estate can take a half a dozen years to pan this out. So that's going to be a financial stress we're going to have to deal with and face for a long time.
Yeah, in San Francisco, though, I think it goes beyond just the fact that you've got people like Hilton and Nordstrom's and some of these major companies just walking away. San Francisco has really now become a place that used to be a huge tourist attraction, and now they can't even find the tourism because between those two hotel chains, that accounted for over 10% of all hotel space that's being used. I mean, that's a massive number. Now let's change gears real quick here, and let's talk about, we've got a Fed meeting coming up here, and then we also had a really interesting exchange yesterday with Janet Yellen talking in Congress when they went ahead and asked her, hey, what if China at some point in time, if this whole thing between Taiwan and China heats up and we start to try to push our might there, how quick they could dump over $800 billion in treasury bonds all in one day. What would that do? What was her reaction to that, Damian?
Well, she didn't really have an answer for that in regards to them dumping it, which is, it's not actually something that's going to happen. It is happening, and it's been happening. My perspective is I think there's a little more of a shock value for dumping it all in one day. There has to be an ultimate buyer for it, but they're de-dollarizing, they're deleveraging their balance sheets related to the United States and have been for a long time, and that's basically a dual problem that the Federal Reserve is having right now because their monetary policy is creating inflation, and we're exporting it around the world. Every country in the world is not happy with us being a bully politically and militarily, and now financially exporting our inflation, and meanwhile putting tariffs and everything else on them. So it's kind of like a double-edged sword for them because they need to sell more bonds, they need additional foreign countries to buy our debt. Meanwhile, we're tearing our relationship apart. So when they start dumping that debt, yeah, it becomes a big problem because it's gonna affect us monetarily, and it's gonna create more inflation because if no one's buying our bonds, in the most simplistic terms, we're going to have to buy them ourselves, which is just a circular printing money and buying bonds. So, we could go into this for, there's so many layers, and it goes so deep because this has relationships with all the other BRICS countries. But when it comes down to brass tacks, the Federal Reserve is meeting today, and they're supposed to have no interest rate hike. They don't want to shock the markets.
Do you think they might lower rates?
They're not lowering rates. What they're going to do today would either be, there's two terminologies. One is a pause, which is they're going to pause raising rates and then look at data going forward. The other option that the street is anticipating is a skip. It means we don't raise rates this time, we look at the data, and then raise rates again in July. Granted, it's going to be a minor, a 0.25% raise, but it keeps putting pressure, again, on these regional banks. They're the ones that don't have the capital, so they're getting it from both sides. It almost seems like it's an intentional type of a plan.
As everyone's being distracted with, it's not like it's minor things, but arresting the president and everything else that's going on right now, and everything that the main media is focusing on. What we try to do is focus on what's happened with the money in this country. And the more important thing right now is, once again, we're going to be able to update you on the petrodollar. There's a couple of really big things that have come to pass, one of which was actually off the Washington Post, saying that the prince there, first of all, to kind of back up, can you kind of help explain to the viewers why it is that Joe Biden and the Prince of Saudi Arabia don't get along at all, and what kind of helps roll that ball down the hill?
Yeah, well, the big difference is he's no longer a prince, and he's the king of the country now, so he has a little bit more power. He is
at 36 years old, if I might add that in.
And that happens in those type of countries. Well, he has a very bad relationship with Joe Biden. The last meeting he came out there, he would not shake Joe Biden's hand. And they do that in that culture because they're disgusted by you. They will not shake you because they think you're filthy. So if you notice, if you look at the media, what they did was a fist bump. And that was all he would give him in regards to, acknowledging him being the president and visiting. But I do think it goes back to the killing of, a Washington Post journalist, which was Khashoggi, where he was killed, supposedly and probably, by the king and his henchmen there. But when Joe Biden, on the stage of the world, is blaming him for that, it causes a lot of bad blood. I think the cultures of Saudi Arabia as well, and Russia included, and they've been very vocal about this. They're not like the direction that our wokeness is permeating throughout the United States and trying to be spread throughout the world. It's completely against their culture. So now they've created this band of other countries. So Saudi Arabia is trying to benefit Russia and strengthening the bond and weakening our bond with the United States. Originally that was for protection of their oil, and we made that deal. Well, now they don't need the protection. Our military is not as effective. It's all tied up in Ukraine. All of our military equipment's been expended. So we're not really the global powerhouse that a lot of that we thought we were or we used to be. So
it's definitely hostile behind closed doors from what we're starting to gather. And we also know the Energy Department, they know that they're going to cut probably another million to a million, well, I think it was 1.14 million barrels of oil, somewhere around there through the summer drive time. So we think that from what we're seeing, unofficial reports, official reports, what we call them, we're probably going to see gas prices be raised by another about 32 cents during the summer drive period. So it's going to be a very interesting time. Now, we want you to go to the petrodollar. You can text in here and you can find it, just say petrodollar on the text. Also, you can go online and you can sign up for the petrodollar updates, which is really great because whenever we find this type of information, doesn't matter what source it comes from, we put it into this huge timeline here and it continues to update you as time goes on. This is something that's happening right now in real time in front of us. It's no longer something that we think is going to happen. It is happening. So something we want our clients to be keeping their eyes on because it's definitely going to affect what happens to your dollar. I think that, Damien, you and I can pretty much agree that the reserve currency status of the US dollar is going to come to an end. We just don't know when, but I think it's going to be in our lifetimes. What do you think?
Well, I think, I mean, unless you plan on dying in the next 5 years, I think we're seeing things accelerate very rapidly right now. I mean, we used to have a portion of like 70% of global transactions. It's already been reduced by 15 or 20% in 2023. Countries are pulling away, and they're de-dollarizing, and they're causing the inflation and the buying power of the US dollar is slipping away, which is our influence. That was all we had. And so, yeah, I think that you're going to be seeing it's a waterfall effect, and it's accelerating. And that's probably why they were asking Yellen about that. Like, what happens if it happens in one day? Because this is something that people thought would take decades to happen. And it's dropped in such a dramatic fashion, or such a large percentage in just like the last 6 months, that I think that even they're taken back. And behind closed doors, you're right, they're probably very concerned.
All right, thank you very much for joining us today. We appreciate you spending a little extra time with us. Make sure you sign up for that Petrodollar report. I'm telling you right now, it's worth your time. And we will see you next week on the Gold Spot.